All right. So, German bank braces for wave of bad loans, saying greatest real estate crisis since the financial crisis. Very interesting here. There's an article here from CNN Business. I'll link it below so you could read up on it. But basically, you have many banks around the world, especially this one I'm going to talk about. I'm going to share here my screen as well so you could check it out. But many uh, banks around the world going out and raising capital, getting enough capital out there because they for sure see a lot of problem in the real estate market. And they basically, this one German bank says right here, greatest real estate crisis since the financial crisis. So if we scroll down, it says here, Deutsche PFN Brief Bank. Okay, we'll just call it PBB. I probably butchered that. But basically, a German lender focused on real estate, okay, has set aside more money for bad debt as it braces for what it says is the worst decline in commercial property values in 15 years. PBB increased its provisions for losses on loans in the fourth quarter of 2023, taking the total set aside for the year as much as 215 million euros, about 231.7 million dollars. It said in a statement Wednesday, citing persistent weakness of the real estate markets. Okay, so basically, what they're saying here is that this German bank, this PBB, and this is not the only bank, it's happening in the US. It's happening in Switzerland. It's happening in also Japan. It's happening all over the world. It's just not being reported that well. What's happening is a lot of these banks are taking excess, some cushion of cash to protect themselves from losses from the commercial real estate market. And you see this 215 million, that's a drop in the bucket. There's going to be more, and there's already has been a lot more losses that has already happened, and we have yet to see the end of this year and the end of next year when all trillions of dollars come due in commercial mortgages, and that and the effects of defaults of those trillions of dollars coming due. We have yet to see the effects of that. Okay, this is just the beginning. The global financial crisis peaked in 2008 as banks collapsed under the weight of huge losses on mortgages and related securities following the bursting of a bubble in the housing market. On Thursday, PBB announced that it had enough cash and highly liquid assets on its balance sheet, a liquidity cushion, to operate 6 months without new funding from investors. Okay, this is just for 6 months. All right, and then when time comes that many of these commercial banks or commercial property owners have to renew those mortgages, it they're going to need, trust me, more liquidity cushion, more than 215 million. To operate the 6 months without new funding from investors, it said it would publish further details with its 2023 earnings in March. So we'll know more in March. Fears about health and of the bank balance sheets have surfaced in recent weeks. We know that because we've seen some crisis with the regional banks in the U.S. We also heard, and I mentioned this, U.S. Treasury Secretary Janet Yellen concerns, talking about her concerns about the commercial real estate industry. And remember Jerome Powell as well, taking out the statement in its statement that they see the banking sector safe. It took that out. And no one asked Jerome Powell, why did you take that line from that statement out? Very interesting that no reporter asked Jerome Powell, do you not see the banking system safe? He took it out of the statement. Just a couple months back, he said the banking system is safe, and now he took it out. Meaning what? It's not safe anymore? And guess what happened after that? Right? Let's not forget. It says it here. New York Community Bank Corp, its stock dropped 60% of its value over the past 8 days, and Moody's downgraded the bank's credit grade to junk. Junk rating, the lowest rating you can get, because it's having issues with commercial real estate. It's got a lot of losses. Let's also look at going back here. I skipped a couple of paragraphs, but going back here, shares of PBB, going back to the German bank, the second German bank to warn mounting losses on commercial real estate in 2 weeks, have slumped. Their stock price has also slumped 17% since Friday. The stock market has tumbled more than 25% so far this year and 40% in the past 6 months. Okay. And this is the thing I've been saying. When you look at real estate stocks, when you look at REITs versus the actual real estate properties out there, there's a big disconnect. If those properties were on the stock market, you can definitely bet that a lot of traders would sell and short that stock, causing the value to come down. The fact is that real estate is a private market controlled by private money. Yes, controlled by also households who own, let's say, their own homes. But we're talking about the bigger players out there, like private equity firms, hedge funds, right? Big institutions that are not listing these properties on the market. They have control on what they can do. Not only they have control on what they can do, but they can control the value, the price of these properties, which means it can be manipulative in a way. Same thing, the builders who go out and build properties, if they're not putting these listings up, increasing the supply, then they're controlling the prices, which is crazy to think about. But if you see the stock market and you see traders, they've got a completely different opinion. Just like what we've just seen here, PBB has been hammered this year, 40% decline. Look at some of the bank stocks in your country. Look at, how their stock has performed. There's fears around these higher rates, mortgages, right, that are coming due, and how that will affect the banking sector. Now, Germany's biggest lender, Deutsche Bank, said last week it had allocated 123 million. This is another bank, one of the biggest bank in Germany, is also allocating money for a cushion to basically make sure that there is some sort of cushion for losses in the future. So they did this during the fourth quarter of last year to observe potential defaults on its U.S. commercial real estate loans. That's more than quadruple the amount it set during the same 3-month period in 2022. Okay, so you see this. Do you guys see the trend? 2022 versus now, they quadrupled the amount that they set for the cushion. And guess what? It's going to go up higher. They're going to need more liquidity as more losses come in. All right. They do this very slowly. They got some losses. They add some cushion. Another 6 months, more losses, cushion, losses, cushion. You're seeing that. So this is not only a story in Germany, right? Banks as far apart as New York, Tokyo, Zurich have also reported mounting losses, right? U.S. regional lender reported 252 million in losses. It also set aside 552 million in quarter to absorb potential losses. Okay, 500 million, 200 million. Slowly, this is adding to a billion, and then billions to trillions, right? Also, Japan. In Japan, there was a bank that was tied up to U.S. offices, taking in 28 billion in losses in yen, which equates to 190 million. So this is not just centrally in one area. This is happening globally, right? A Swiss private bank also, same thing. Said profit slumped 55% in 2023 because it took 586 million Swiss francs in losses, about $680 million in losses. Okay. This is happening not in just one place like the US, it's happening globally. And if you remember in my past videos, I said that this will be globally coordinated. The world economy is all interconnected. Everyone will be affected. Simple as that, right? The recession that you're seeing in China, the property crash in China, the stock market crash in China, even though China came out with some rescue bill and planned to pump money and liquidity, did not work, and their stock market continues to plunge. We have yet to see that in the US. We have yet to see that in Western countries. Okay. I will also leave off with one thing here: the yield curve. Germans yield curve. The German yield curve here. First time in history when you look at the 10-year versus the 2-year, the 30-year to the 2-year, right? The yield curve of the 30-year bond versus the 2-year bond. Back in 2008, the crisis, the real estate crisis there, it did not even go negative. Whenever this curve goes negative, it basically has been a very good indicator that we're certainly going to see a recession. So in this case here, first time in history in 2022, this went into negative territory, and it's still negative. And lo and behold, this article, German bank saying greatest real estate crisis since the great financial crisis. And we've got trillions coming due end of this year, next year. You put the pieces together. You tell me what you think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.